Time for the word on Wall Street. Top investors watching your money. Joining me now, the Fitz-Gerald Group Principal, Keith Fitz-Gerald, Laffer Tangler, Investments Chief Investment Officer, Nancy Tangler, and Carson Group CEO, Ron Carson. And good morning again to all of you. And Ron, I do want to start with you on this sell-off that we're looking at again. I can't get over the volatility that we're dealing with right now. We've had these we've had 400 point swings every day. And the Dow is down 357 in the pre-market right now. The 10-year, the yield is up already again above 1.5% because you've got the September jobs report coming out. There might be a correlation here, but let's give out the numbers. 473,000 jobs expected to be added, while the unemployment rate expected to tick down to 5.1%. What do you expect out of the jobs report, and what is the correlation, do you think, to the 10-year and the pressure we're seeing today? I know that's a lot, but go for it.
Good morning, Cheryl. Well, first of all, the jobs number is going to be probably pretty good. And matter of fact, the market believes it's going to be good for the balance of the year. But I want to go back to something you said earlier about volatility. It does feel like it's more volatile, but the fact is we've had 20% less 1% days this year than we had last year. And so the market really just feels like it from the recency effect. And something interesting to note is this economy has been pretty resilient. We've had the demand that has been pent-up demand that's built up. But I think something the market's missing is the fact that, yeah, interest rates are going higher, and the market's spooked by that. But let's put it in context. We have 1.54% 10-year. We have a 29 basis point 2-year. This economy, and we could go through a 10%, we could even hit a 15% correction. It's possible, but it will definitely refresh because underneath of all of this, we have an economy that can't even absorb all the fuel that's been placed. And we have Biden trying to throw trillions of dollars and more fuel on top of it. So really being surgical, understanding the companies you want to own, I think is, take this weakness, and we could go here for a while, right? We're in that time of year, September, October timeframe, sometimes where the markets can struggle a little bit. And the market's trying to figure out what the Fed's going to do. And the fact that the Fed is going to be in a position to start to taper, not raise interest rates too much, but to taper, I think is a positive for the economy longer term.
Now, Ron, and that's why I think so many people have been so vocal, myself included, that this $3.5 trillion thing is a disaster. I mean, it is not needed. If you would have told me this last year, then maybe I could have given you a reason to say it's a good idea because the economy was just completely suffering, but we're not there anymore. And I think that's the frustration you're seeing from so many, and while the alarm bells are going off. Keith, I do want to ask you about the other big headline of the morning. That is certainly Facebook. Again, because you had this whistleblower. She testified on the Hill yesterday, and she brought to light a lot of things about the company. They harm children. They're threatening American democracy. You say Facebook is in deflection mode, and you're not going to buy the stock until Zuckerberg is out. Why do you say that?
The tenor has changed, Cheryl. This is no longer about the company itself. She made allegations that, if proven to be true, are serious litigation territory, misleading stockholders, misleading investors, misleading those who are involved. This potentially is tobacco, but just with data. Zuckerberg, interestingly to me, does not seem to accept responsibility for what's happening. It's always, we did this, they did that, these aren't correct. He's gone on the attack. He wants to discredit this witness. That, to me, is not the mark of an executive who should be at the top. I think they've got a golden moment here, and I'm worried that they're going to blow it, because if they do move him out, then the company goes into growth mode again, because they can simply step up and say, you know what, we didn't do things exactly right. They don't even have to admit they're wrong. But it's a different tenor in the conversation today. I think they're going to have a hard time pulling out of this one without some severe repercussions.
Yeah, no, and again, I brought this up the last hour. We've talked about this for a long time, for years, since they went public in particular, that he is the founder, he is the chairman, he's the CEO. Remember when he was running around during the road show wearing the hoodie? I mean, that wasn't that long ago, right? I mean, where's that picture? Because it just showed the concern that Wall Street had at the time. Great platform, great company, But should he have so much power? And he's got all the voting power, on top of the fact that he's got all the control, and he's leaving it to algorithms to police a platform that he's not policing at all. And I thought her testimony was just fascinating yesterday. I'm with you, Keith. I'm 1,000% with you. Nancy, we talked about inflation earlier. I got to go back to inflation with you. This story on cotton prices is really worrying me. A 10-year high for cotton prices. That's a 22% jump in 2 weeks. This means higher prices for the consumer who are already paying higher prices for gasoline and for food. Now they're going to be paying more for clothes.
Yeah, Cheryl, this inflation story is probably going to go down as one of the most misrepresented by the Fed. I mean, they've been wrong on every level. They were wrong in the previous 10 years when they couldn't hit their 2% target. And now we have a frustrated Chair Powell who just is frustrated with inflation. But you're right. You've got cotton prices up, factory closures in Vietnam due to the to COVID. You've got shipping costs soaring. Natural gas prices are up fourfold pre-pandemic levels in the U.S. and in Europe they're at $32 per million BTUs. That's unheard of. And so this ripple through the chain is going to devastate. I mean, we've seen wages go up, but they're not keeping up with inflation. In fact, not even close. And so I think what companies are going to have to face, and we have heard companies saying, you know, to the tune of 45% of them in earnings calls last quarter that inflation is having an impact. We're going to have to see what happens with margins, because the Atlanta Fed just downgraded their GDP forecast to 1.3% from 2.3 just on October 1st. This is for the third quarter, all the while Wall Street strategists are raising estimates. So there's a bit of a disconnect, and I think that's some of what's roiling the markets here.
Yeah, no, I mean, the markets are screaming loud and clear. I just hope that people start to really listen, in particular in Washington, as we've got this debt ceiling debate that continues on top of everything else we're dealing with. Guys, thank you. Keith Fitz-Gerald, Ron Carson, great commentary. Nancy, of course, stay with us. You're going to be with me all morning long. And be sure to tune in.
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below, and of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.